Nice. There we go. All right, cool. So let's, if anybody has any questions that they want, that they're thinking of specifically for Brendan, if you've had experience with option selling, if you're new to it, whatever, it doesn't matter, but feel free to unmute. And what I'm going to do is just take some notes and then I'll shoot it to him.
Aloha, brother.
What's going on, man? How's it going?
Yeah, my name is Steven. I'm from Oahu. So I follow you guys a lot during the day and stuff like that. But nonetheless,
Yeah.
Yeah, man. So obviously I have a long-term portfolio that have a lot of dividends, right? So those stocks I kind of don't want to lose, right? So being very precise on like covered calls in that aspect to not, you know what I mean, to properly, I guess, set it up where it's not obviously nothing's safe, right? When you're doing it. So like if it does get to the price point, they have the option to buy the actual the stock. So I don't want to lose those that I have like accumulated throughout the years, but I do want to use them to obviously make, income off of them on top of the dividends that I'm getting on top of it, especially now because everything's dipping so low. I'm just buying up as it's getting lower.
Yeah, absolutely. Right. And I mean, if you like the company, and you like the prices, it's smart. Yeah. So, all right. So dividend stocks, basically that you don't want to lose, like how to sell covered calls effectively, how to use option
Like set it
selling
up.
effectively. Yeah.
Exactly.
Yeah. Perfect. I mean, I'll let Brendan touch on this obviously, but definitely, I think the biggest thing, man, is, two things, right? One is exactly what you said. Nothing's, risk-free in this game. We can just mitigate risk as much as possible. The second part is just to sell. It's really a balance of what do you want to collect for that premium, right? To lower your cost basis. So the farther out you go, obviously, as far as away from price, right? The farther out you go, out of the money, you'll get less premium, but then you can add some time to it. So it's really just kind of understanding, the stocks, looking at expected moves, maybe, knowing when their earnings are. And, and that's it's really just the balance of that, and each company has its own profile, I guess you could say. So, but I'll let him touch on that. He may have some better ideas, some combinations that would work well with that. But yeah, cool. I have your question for sure. Is that the only one?
In that aspect, yeah.
Okay.
That was one of the bigger things that I saw, just obviously with the topic. I was really interested is just kind of pick his mind on that. I don't like to interrupt, obviously intraday trading. So,
well, no,
why I
and
went on
this is going to be set up interactive, right? Like I'm sure he'll go through a bit of this is just kind of off the cuff, right? We don't have a huge plan for this. I just know that we've done this before, and we tried to record it, and it Zoom like got cut off and just a whole bunch of shit. So anyways, this is our second go at it. We're going to do it all. I think we won't have any issues with Zoom this time. So the nice thing is, man, basically it's going to be interactive. Like he wants people to ask questions, you know what I mean? He wants it to be like a discussion more than anything. So yeah, feel free to add to that question. This just gives them maybe a list to kind of go off of. I do want them to dive into basically going over option strat, which is the website, the software that he uses, and that's free for people, with a limited, there's a limit to what you can do. But then I think even the paid version is extremely cheap, but it's amazing, honestly. Like it's a great tool. Back when I used to play with spreads, I used to trade them on and off just a very little bit. I had, if I had known about something like option strat, it probably would have pointed me in a direction where I would have kept, integrating them into my trading. Now, covered calls are a little bit different, obviously, but it is option selling. So yeah, we'll get that asked, but don't be afraid, you guys, to step up. And this to everybody, to unmute and just, maybe wait for a decent time. But even Brendan says, he's like, he can get going and rambling. He never gets offended by somebody, kind of jumping in and asking a question. It helps them kind of stay focused, and I think it'll be good, man. So does anyone else have any other questions that you want to kind of have them focus on? Anything that comes up? The basics we will, of course, get on. We will make sure that we're covering, but feel free to unmute and come up.
I've been wondering about utilizing services just to kind of get an edge about what's happening with options as far as like cheddar flow or there's a couple of others that I stumbled across when I was reading about Dartpool.
Yeah, like Black Box, there's I think it's Strat or something like that. That's what Monative uses. Options or yeah, shit. But yes, there's a bunch on Unusual Whales is another. I mean, so we have what we use inside the Discord is well, a couple of things. We have a bot that will post unusual options. Where does that come from? But then we also have a couple members that post from Black Box, right? But then some, I think I want to say Brendan has Cheddar Flow, but I'm not positive. The thing with Cheddar Flow is that it's I do think there's a little bit of a limit on how they, don't quote me on this, but how they I don't know, some of the way that they relay information it isn't always the most clear. Like, I don't want to say anything bad about it because I think it's effective and there are people in the group that do use it. So it's really just, but I'll let him answer that. He can give you the best what his recommendation is. I know I like Black Box a lot. They have a lot of offers where you can get started for cheap, but then afterwards it's $100 a month. I believe maybe $1,000 a year, something like that. So it's one of those things that it's not, I mean, look, it's for what they offer, in the platform, it's very much worth it if you're utilizing it right. And that's one of the biggest things that from my, that I could give advice for is making sure you use it. And what I found is that when I just was trading by myself and not doing, these group trades and everything, basically, I wasn't, I had Black Box, like I enjoyed it, but I just didn't put the time in to really, utilize the service, right? So I ended up just letting the subscription just end. But now what I found is that we have the Discord, so like people are putting, we have kind of a collective, right, where options flow is being posted along with dark pools. Same with the Bookmap. I don't know if you ever heard of Bookmap. That's something that Digi shares in the stream, and it allows you basically are seeing real-time order flow on as far as shares go, right? So, but it's really effective with SPX and SPY and QQQ for day trading. So it's one of those things, right? If you're going to use it and you're interested in it, I imagine, I like Black Box, but it looks like Brendan's here too, so we can definitely pull him up if he's ready.
What's going on, guys?
Yeah, there you are, bro. What's up, man? How's it going?
Not much. I heard you guys talking a little cheddar flow, a little
yeah. So there's been two questions, and I told them. You tell them too, but I told them that you're good with people just asking questions throughout the.
Yeah, I think it flows better, and it allows me to cover like what you guys are truly like interested in and realistically like considering or able to do. Right. I'm not an educator at all, so like it becomes hard to understand and grasp exactly what I should cover. So yeah, questions are more than encouraged.
Yeah, no, man, there's so much of it. The two questions we have, right? One was what you just heard about what option services. The other one was from Steve, and he may have more questions, but basically he was saying that he has a long-term, with dividend stocks, companies that he doesn't want to lose, right? But he's wondering what's the, he said there's risk to everything. There's no risk-free plays in this game. But the thing is that how do you sell, like what's the most effective way to sell covered calls against a stock that you don't want to lose, right? So that's something I think you were touching on.
That's a great way to start, to be honest, because that dives right into the selling of options, right, at all as a strategy, and then from there into like how you might want to sell the option but use a spread to cover yourself. So I think that covers most of what I was going to get into.
Absolutely.
So
and definitely, Brendan, and I'll mute here and let you rock and roll. And you should be able to share your screen. So just tell me if you can't. Start wherever, start there and lead in. Definitely, I think going through option strat and really touching on just some of what the features there are and whatnot would be huge. So, I know we touched on a lot of this in past videos, but this is the one that, people can refer back to. So yeah, it'll be, I know you go in more depth.
I'll cover anything and everything, right? So like, exactly. Whatever we don't cover, I'll just get to eventually.
Awesome, man.
So yeah, I would definitely say like I can start off just touching on a few tools real quick. Like he just mentioned option strat. If you're not familiar yet and you're listening, just you can follow along on option strat, OPT option STRAT.com. Or you can use the app. And it basically is just like allows you to optimize and sort of visualize, kind of like visualize like output, like I guess I view it as an output of my trade, right? Like as I'm conducting the strategy in my head and kind of like thinking about it, it's allowing me to visualize that in real time. I'm about to share my screen so you guys can see if you in case you don't have option strat or have it open right now. But this is basically option strat right here, right? So options, this is a certain trade setup. I'll obviously start from the beginning, but option strat allows me to like most effectively I would say strategize around like the strikes that I'm picking, right? And are you able to see my screen at the moment? Just wanna make sure.
Yeah.
Okay,
Yep.
cool.
Yeah, you're good to go, bro.
So
for
like
sure.
when I'm like putting the strikes together in my head and envisioning like the trade, it's very hard to visualize, right? The trade in terms of like its profit and loss, right? And where this what would adding a certain strike or adding a call or a put do to my trade, right? Is the reason I started using option strat. But for anybody that's new to options, right? We're gonna get into sort of like the risks associated and the maximum you can lose, the maximum you could gain. This tool allows you to kind of have a visual of all of that laid out for you. And to me, it's none of the option, like Greeks or components in on that option strat is displaying to me are not things I couldn't calculate and I don't calculate in my head, right? They're just here laid out for me, right? So I like to make sure I preface that is that almost anything that I am configuring or viewing and mathematically like receiving from option strat, right? It's just an aid, right? It's an aid to have it calculated faster and displayed to me so I don't have to like go through and find certain things or put it into Excel and chart a few things out. This is doing that for me. It's not finding a trade that I should take, right? Because it looks good, right? There's definitely a difference, right? It's aiding it. It's helping me view it and it's adding to my conviction in the trade for sure. But it's really helping me strategize around which is the most optimal trade, right? That allows my thesis, right, to profit if played out, right? So the first thing I like to do always, right, is me and I'm not sure if any of you guys are familiar with Theta Rider on Twitter, but the first thing like when we met on Twitter, we bonded over was the fact that we both believe that an option, right, trade should always be able to be explained with a sentence, right? Like you should enter the trade saying, I would be willing to buy or sell, right, such and such stock at such and such price by whatever date, right? The reasons why, what you may be, what your thesis may be as to whether or not, it's earnings, whether or not it's, a catalyst, or if it's just, a long-term, I guess, sector play, right? You want to make sure you can explain that trade in a sentence so that you can help yourself, right, understand where are the strikes going to be set up? Where do I think this is going, right? Where would I be willing to buy it at or sell it at, right? And those are important because a lot of times you'll see bullish flow into a certain stock, right? And you'll think the first thing you would do is what's the cheapest call in that certain ticker, right? Because like that's many people's view of the least risky way, right? To recognize upside, right? If something certain thesis or some certain event plays out. And it's simply not true, right? It's the buying, right, of gambling options, right? That is causes the instability and causes people to blow up, right? It's not truly the selling, right? Because selling options causes that event where like, you might get like a margin call or you might end up being short something that runs and your book is completely blown. But it's the gambling attitude, right? Of I'm going to recognize this much profit if this strike gets hit, right? That option sellers get lost in, right? And they're recognizing seeing these crazy 3,000% upside trades, right? It fools people into buying options, right? Because they see a cheap premium. Most of the time that premium is very, very cheap for a reason, right? So I like to think about it like if that strike that it was cheap enough for me to buy is a strike that I would never have said, right? I would be willing to buy this at this price by this certain date, right? If I was not ever willing to buy that strike, I'm not going to buy the option for it, right? Regardless of if it has a chance of paying out, right? Opportunity cost says that I can find a more optimal trade with those amount of dollars. If I was definitely willing to deploy that amount of dollars, right, today to a trade to risk like with that much upside, I can find a better one, right, where I can make money, right, at a higher rate, right, but not as high of a return. Right. To me, I would rather have a more consistent profitability, right, than an inconsistent maximum profitability. Right. That to me is you really have to be relying on a hope and a dream or like a gamble of some sort. Right. And I don't think options are designed to be gambling. Right. They are a way for you to more leveraged in a more leveraged way. Right. Recognize greater upside. Right. In a like by spectating on a certain event or ticker, right? Certainly, but they're not gambling, right? And they can be used to generate tons and tons of income, right, from an asset you own, and that's where the covered call starts, right? The strategy around a covered call is if you own a stock, right, it's an asset of yours, just like any other asset you own, right? You now own a piece of this. It can generate you income. It should generate you income, right? When you're sitting there and if there's a certain ticker you own, right? And I guess I can go through a ticker, and what you guys may own that you want to sell covered calls on, and walk through I guess the thoughts going on in your head and how I would how you might see me strategize a trade around that in real time, I think might help. But for me, like I like to say the sentence out, right? If it's, let's say the ticker is real quick, we can just show Microsoft, right? If I own Microsoft, it doesn't matter what strike, right? I own it at. But if I own Microsoft, and I'm willing to sell Microsoft, let's say at 300, right? And there's calls, right, being
Brendan.
bought, right, up the chain. Can you hear me?
No, yeah, I could hear you perfectly.
Okay.
I love Microsoft, but like I'm super into Ally, and I'm like that's like I bought a lot of it. You know what I mean?
Ally
And
Financial.
yeah, and I'm just kind of like
Mhm.
that's where I'm like headed with that because I have a lot of it at this point, and so like that's where I'm trying to. Everything you had said was like amazing, and I heard you say those exact words or at least something of it on intraday trading, and like I was able to like totally understand where you're coming from, where you got to be able to explain it, right? It's easier,
Mhm.
you say you're not a lecturer in that aspect, but when you explain it to somebody, it makes more sense because you're hearing it from someone else. So if you could explain the trade or you could explain the setup, it makes more sense. You know what I mean? So
That's
I totally,
exactly
once
right.
you said that, I was like, oh my God, okay, it makes total sense because it's not like I'm going to say, oh yeah, I'm going to do a cover call and, my goal is for Ally to get to $2 or it's to get to $500 in 3 months. You know what I mean? So like it totally makes sense.
Exactly. Yeah, it makes sure that you're realistic, right? It keeps you,
Exactly.
you know what I mean, to like not jumping at a trade that just has humongous upside because you see that profit number, right? It's like I would never ever buy that, right? I wouldn't be willing to buy or sell that. Therefore, why am I buying the option that says I have the right to buy it at that price, right?
Exactly.
It's a very, very speculative thing to do. If there is a ticker that you want to go over instead of Microsoft, like Ally, you said, I can walk through Ally. Do you if you're not comfortable sharing like what your cost basis is, that's more than okay. Because it'll allow me to enter it in. But is there a certain price, right? And because we're going to use Ally, that you would be comfortable selling this at, right? I'm going to walk through an example that I would use if the Ally was, something I own. But if yours is a price, right? I mean, that maybe you own it at 5 and it's at 50, right? I haven't even looked at Ally at all in a while. But if that was the case, right, you would maybe be willing to sell it at 75. That would be helpful because we can strategize around that.
Understood. So like it's at 29 now, and I had at like 35, but as it dropped down, I literally just loaded up. So I have 500 shares of it now, and I'm average cost at $30.19.
Okay. So the way I like to think about it is I look at my cost base. Yeah.
Brandon?
Yeah, I can hear you.
Okay, thanks. I had a thought, but I'll let you finish first, then I'll
No.
say.
Yeah. You want to run? Go ahead. You can run your thought by me.
Yeah, I mean, I know Ally a little bit. I do a lot of research on financials because I like the sector. So before Brandon jumps into the options part of it, I was just going to say, if you're holding for long, you can't buy based on an options price. You first have to do the fundamentals of it, right? You have to make sure that there is strength in the sector, there's strength in the stock. There's nothing that's potentially problematic, and then you can look at options. So I'm just wondering, what was the reason you entered Ally, at this time? Just curious.
Understood. So at this point, when I was looking at it, I was seeing a good buy in the aspect of there's different sectors that they can make money. They have the ability to do home loans. They have great financials when it comes down to auto loans as well. And just in the bank sector, they do typically pretty well. When it comes down to everything else, not 100% sure, upside on how high it could get for say. But just kind of looking at just different things when it came down to, trading view and seeing what, just the numbers in general. And that's kind of just what I went through.
All right, we'll circle back on that. So
Yeah. I'll when we close up on Ally, I'll touch on it as well. So like he had a point, right? And it is the strike price is usually something that I start to arrive at when I am going through the fundamentals, right? And I'm deciding whether or not I like the ticker, or if I'm going through right a certain theory I have on a catalyst, and I'm trying to play a crossover on that. So I'll definitely touch on that at the end. But I just want to first introduce option strat with this trade. So if I own Ally, right, and if I own it at 30. Right, there's got to be a price in my mind, right, that I'm willing to sell this stock at if the stock went there, right? There's it could be 50, it could be 60, right? There's a certain price that I would be willing to accept today, right, to exit that position, right? If I knew there was a guarantee that it's going there, right? And I usually like to not just sell covered calls just for the income, right? But the same way I set up an option trade with the sentence, I like to make sure that it fits, right, what I would be comfortable with, right, in an asset or a ticker that I own. Similarly to, I own a car, it's worth 30 grand, right, let's say, or 50. I bought it for 100, right? I'd be willing to sell it at 70, right? Same exact idea, right? I bought the ticker at 50, it's at 100, it's at 75, I'd be willing to sell it at 100, right? So if you do that, right, let's say there was a tick, like the strike was 50, right? You'd be willing to sell it at. There's the $50 covered call, right? Is what you would be selling there if you want to sell the stock, right? The underlying at 50, right? Now that's not always the strategy though you want to use, because the $50 call, if the ticker's trading at 35, right, is likely not going to be worth much in premium, right? So it doesn't really help your trade. And what I mean by help your trade is if you look here, right, the covered call is one of the first strategies like it has, right? So I'm going to go into this one, but the payout windows, right, and the budget are used to basically explain how much would you be willing to accept or receive in this trade, right? And that accept or receive in this trade is going to be very crucial, right, to the end of my end result and my final performance of the trade, because the spread that we're going to use, right, is going to allow us to lock in that price zone. So the covered call, right, looks something like this. It is long the equity, right, of the underlying. So if, let's say you said it was 500 shares, right, you can just go ahead and type this in, and you said you owned it at 30, right? 31. Let's just use 31.
Yeah.
About, right? And these are the expiration dates, right? For the options that exist in the option chain, right? If you were to pull up any option chain you have, right now, you would see it just has monthlies. It doesn't have weeklies, right? So these are up here, the option dates you could choose to sell it. Now, what we want to do is we're looking to sell a covered call, right, around a $50 strike, let's say, if that's the strike that we're comfortable at. And that's one I think is easy to use just because it's a round number. And what we're trying to do is selling options like about roughly 30 to 45 days out, right, from today is the most, in terms of option sellers, right, their most profitable and highest performance is when they sell options between 30 and 45 days out, right? When you sell options versus when you buy them, the theta, the time, like I mean the time value, right? It usually works against you when you buy options, right? But in selling options, that time value is on your side, right? So you don't want to sell anything too short because then you don't get to reap the, I mean, yeah, like you don't get to reap the benefits of holding on to that theta, right? That's on your side. So as the theta decays, right, you are becoming more profitable as that time value erodes, right? So you want to sell options with enough time value in them, right, to allow the trade to develop, but also let you harvest the premium of that option, right? Now, with the strategy of selling a covered call, which I haven't mentioned yet, right, is I am trying to sell the call at the strike price I'm willing to sell the stock at, right? But I'm not hoping that it does actually go there, right? My goal in this is to just collect the premium that I receive for selling the option strike, right? And have it not ever go to that strike price and expire worthless, right? The same way that you can imagine if you bought an option, right? Expiring worthless would be the worst thing that it can happen for you, right? You'd be down minus 100%, right? You lost all of the premium you spent. That same event is what you're looking to have happen. That's why the strike price is so important, right? So if we said we'd be comfortable selling it at 50, right? It also means that we believe, right, it's probably not going to 50 right here, or we wouldn't be comfortable selling it there, right? So if that's the case, I'm comfortable selling, right, the 50, which is way out here. So for this example, let's use the 30, the 40, right? If I was to sell the 40 strike, right, and I'm long 500 shares at 31, the 40 strike is receiving 0. There's no bid, right? So I can't sell that. There's no reason for me to sell that because I would be receiving no money in premium, right? If, yeah, right here. So if I was to say I have, I have pretty strong conviction, right, that it's going to go to, but it's going to stay here, right, around 31. But if it goes to 35, I'd sell it, right? I think, though, it's likely to fall a little bit, right? It seems like you're willing to sell covered calls usually in a stock, right? That you're more than happy to sell it at a certain price. But the reason that you're selling covered calls is that you're temporarily bearish, right, on the stock that you own. You would like to receive some premium to lower down your cost basis, right? When we do this, the goal of bringing in income from the asset we own is for all the premium we receive by selling an option, right? We're hoping that option becomes worthless, right? I collected all the premium for it. I held on to all the premium. I did not have to sell them the stock. And now all that premium is used as a reduction to my cost basis, right? So over time, the goal is to buy stock, right, and sell calls against it higher than the strike you believe it's going at, to continue to lower down your cost basis on that ticker and widen up, right, increase your performance, right? So it's basically paying you back for the equity, for the money you put up to buy that equity. At least for me, I like to think about it that way, right? If you own a piece of, if you own stock, you own a piece of that company, this is the way that you get to generate cash flow from that, right? Is giving someone else the right to buy it from you if it went higher than your strike price. So right here, if we were to sell the 35 call, right, we're receiving a credit of $5, right? That's how much currently the 5 cents, right, bid is for the 35-cent strike calls, right? Now, what this would do is selling 100, right, shares would be one contract, right? So if I'm long 500 shares, right, that means I have the right to sell 5 contracts, because like when we buy them, right, a option contract, one contract, right, is the right to buy 100 shares of the underlying or sell, right? So for this, every one contract, we have the right to sell 100 shares, right? So if we own 500 shares, we have the right to sell 5 contracts, right? So 5 contracts, 5 of these contracts, right, would be instead, so you go up in here into positions, right? Or you can simply just double click on the strike. And in this, I'm able to just say, okay, I'm going to sell 5 of them, right? Instead, that allows us to say, now we get $25 in credit, right? So although this is not ideal, right, because I'm not receiving all too much, right, to sell this strike, it doesn't seem like other people, right, others want this trade all too much. But that's exactly the reason why we want to sell 30 to 45 days out, right? Is because the amount of premium we're going to receive for the strike that's nearest, right, is going to be the least, the same way you would pay the least, right, for the option that's most nearest dated to you. So a lot, like the easiest way it's always been for me to understand how to sell options best is to think about what the last thing I would want to do or have happen to me if I was the one buying the option, right? There's always someone else on the opposite side of the trade of you, whether it's a market maker or if it's another person, right? So what they don't want to have happen to them, you want to have happen to you, right? That's what you're hoping for. So to me, in the event that I was buying the option, right, I would not want to buy an option, right, that's within 10 days. If I could get an option, 45 days out, therefore I have 45 days to see my thesis through. So like we said, selling the option for 38 days out, right, instead of the one that's 10 days out, this triples the credit we receive, right? Now we received $75 per, okay? So what this does in using option strat to set these up, for me, covered call is not the most ideal to use option strat for, but it will still allow you to look at it as if in the event, right, you were to sell these calls, your break even lowered down by, it was 31, it's now 30.85, right? You're breaking even anywhere above $30.85. So as long as it stays above 30.85, right, you're breaking even on your equity you've sold, right? But if it went above 30.85, right, you're running the risk of the option being bought and called away from you. That is something we always have to be comfortable with, right? When we're selling options, covered calls most especially, right? It's an asset we own. We have to be willing to let that sorry, let me just accept his big request. We have to be willing to let that, be called away from us and accept the premium we received for it, and then the 35. So just real quick for anyone that's not in here. Oh, not sure why that happened. Oh.
Brandon, I have a question actually. Not a question, but
Yeah.
to your so if I do sell cover calls and they do climb to close to what I sold them for, let's say an example, strike 150 and they're at 149 and they're 2 weeks, before expiration, I can buy them back. It's no issue for me to do that, right? Correct?
Yeah, give him a second. I don't know what, not sure what changed there, but,
He's not in the call.
oh, did he drop?
Yeah.
Okay, yeah, hold on. Something was up with his. I don't know what happened there with that, but, hold on, he'll be back in a second. Someone started taking over my screen, he said. And then it just booted me. What?
Someone took over his screen.
I guess he thought so, yeah.
Could it have
Is that
been
even
me when I
possible?
entered into the Zoom?
I
that
don't
how-
think so. I don't know. The only thing that people can do is start, I think people can like draw on the screen. Hold on, he's gonna hop back in here.
On the Blackboard? I've seen that, but when I
Yeah,
got into the
that's-
Zoom, the screen was like all messed up and I had to pinch it and make it smaller and
Yeah,
I had
that's
to
not,
adjust the screen. But that wouldn't be anything to do with him, huh?
no.
No, SJ, it was not you.
Yeah, hold on a second. I think it was the annotation, right? So,
Yeah,
Where-
somebody enabled closed captioning.
oh, well, that's normal, but where's the annotation? Well, it's because no one's sharing the screen right now. Hold on. Yeah, I think someone was drawing on the screen, so just give me a second. I'm gonna figure it out.
Yeah, someone took over his screen and then typed in a 4-letter word
On his screen, yeah, in the,
in your chat, class schedule thread.
Yeah, Brent's typing on Discord, says he's joining that.
Yeah, it's in Discord.
Got hacked.
So it was on his computer, somebody did something, so.
okay, and it actually has yours too, but that, or wait, KP, did you say that? In the Tequila Girl, did you write that in the,
That
whatever,
was
in the thing?
weird.
Here. I don't see tequila here.
Tequila was just here,
And I
yeah.
both- Tequila and I both responded to that.
That was so weird. Like
That's weird as
so
fuck,
just
bro.
like it said someone would like to control your screen, and then I thought it was traders. So I said yes, and then just like
Yeah,
they
no, I
wrote
see it
that
now,
in the
right?
group.
Where it says, yeah, it says cunt or whatever in there, right?
You
Obviously,
pissed off
Yeah,
the rest of
that-
them, Brendan.
he like took my room. I mean, took over my computer and went into that Discord and on my
It
computer
wasn't
and
me.
wrote that. I'm like looking at it, like what?
but how the fuck did, yeah,
was so
I didn't think you could do that on Zoom. That's fucking ridiculous.
As soon as
Yeah.
I
Request.
signed in, it happened.
That was interesting, yeah.
That's
I was like,
fucking weird.
Brendan, what the hell? What are you mad at, dude?
What's
Yeah.
jnewcars@gmail.com? What is that?
No, it wasn't me, dude.
No, that's, yeah, that's.
No, it wasn't.
It's
No, it wasn't
I
JK.
think we're all right.
That wasn't me, man. When I popped in, it happened right
Well,
away, and then I lost Brandon right away.
Gotcha. I just have never seen what you've got on your screen there before. Okay, I'm muted.
What do you got, my dog? That's it, right?
No,
way,
but
somebody-
also your email address is there.
Oh, I don't know about that.
Yeah, well,
wow.
so there's two JK new cars at gmail.com.
Well, let me leave. I'll come back in. Hold on.
Hold on, I think there is, unless you keep muting. Hold on, you might have just muted, but yeah, give it
Were
a
you
try.
guys able to
I did. mute.
see my screen now and or before?
Yeah, we can, but yeah, keep an eye on that if that's yeah, and then somebody posted, let's see here. Here's a video on this. You may need to sign in to view it. Yeah, don't fucking follow that. That's some bullshit. Somebody's taking over the whole call, I see. Okay. So
Well,
like,
Traders,
Ignore
do
what
you
just
want to
happened.
just
We
shut
can
it
continue.
down and then come back in?
yeah, let's do that. And
Yeah,
Put a new
end
link
this
on
Zoom
there.
and create a new link, traders, that might take
Sure.
care of it.
yeah, but people came in from
Twitter or something.
from Twitter, yeah. So I'm not to send a link out to them too. But here's the thing, I don't know. I mean, do you think they're still? I don't think they're still inside of this, right?
I mean, I
Question is
think
whether or
we
not
should
I
just
have
quit.
it.
We could always go back into it, but I would quit out if I were even you as the host, and then we could just all rejoin it.
Yeah, that's fine. All right. So what we'll do is, yeah, we'll just rejoin it. That's fine. I'll pull
All
up
right,
my
I'll be back in a
yeah.
few moments.
Sounds good.
Sorry.
But make